Hello everyone and welcome. My name is Tim from the Camp Compound and it is time for our daily technical analysis video. Let's get right to it. It's a bit earlier than usual because I have to travel in a bit, but in front of us we have the Bitcoin US dollar 1-day chart and let's get to it. Yesterday we talked about the potential of a bullish engulfing in a 3-bar pattern and that worked out perfectly to a T. As we can see, there was a nice bar down through the support, and then in the 2 bars following, we had 2 strong upwards bars, which closed above the opening of the initial downwards bar. Now, for the rest of today, it does look like it was not quite enough to inspire enough momentum in the bulls, as we did make an attempt to break through the 16,700, let's say, but we were rejected. So let's zoom in a little bit to the 4-hour chart, and here we see that we got all the way up to it, tried to break through but got rejected to just under it, and then the second attempt was not strong enough either, and now we're slowly going back down. Now we do see that here in this previous bar there is there's some bullish momentum still there. There's still some interest from the bulls, which we can tell by the longer wick than the longer body, and also by the fact that in the hour and a half almost after, we have not really managed to break this low yet, and currently there's still a fight going on to see if we can make this either a doji or maybe a green bar or just a very tiny body red bar. If that is the case, then there is still a chance for today that we will try for another break. That would be the 3rd or 4th attempt, depending on if you count this, in rapid succession to break this resistance, meaning that it gets weaker and weaker every time it gets tapped. So if we do have another attempt, there is a decent chance of breaking through. What we want to see is a close above the resistance and then another candle to confirm above set resistance to make it a support. So we would have to have 2 candles closed properly above this resistance here, above the 16,700 without retracing. So that is kind of what we're looking at. If that does work, we can go towards the 17,000 and the 17,600. Also depends on the volume while we break through, because we want to see a break on proper volume. On the other hand, if we do close below this low on this candle, then there's a decent chance we'll move back down towards maybe the 16,400 or the 16,250 approximately here, this area. That is kind of what we're looking at right now. The market is following somewhat. Ethereum is actually doing quite all right at the moment. It is continuing its uptrend, but even so, Ethereum is, well, actually kind of breaking its uptrend right here in the 4-hour. It's not that strange, actually, if we see this wedge, which is generally a fairly bearish pattern. It's a very steep move up as well. It's probably a divergence if we have a look. No, not even in this case. That is surprising. Generally speaking, divergences and wedges go very well together, but not always, as we see in this case, which is fine. It could be that Ethereum comes back down to test this trend line and then continue up, but then in that case Bitcoin would have to do a similar thing probably. So let's see, we have this uptrend here, you can see, but we don't necessarily have a similar trend to test unless you count it like this approximately. It's not perfect, it's not great. This would probably be better. Approximately. So we could see a retrace towards that 16,400 approximately, what we were talking about before trying to move up again, but we shall see. Those are kind of the 2 main scenarios that are here right now, and that is confirmed by Ethereum. So if Ethereum does manage to hold this line, we might still see a test of, let's say, 1250 here, this uptrend that we've spoken about over the past couple of weeks by now, I think. We've been talking about it for quite some time now. So that is what we're looking at. Of course, this is still one of our major points to reclaim. Same thing with Bitcoin. We want to really reclaim that 17,600. That is the biggest resistance right now, because that would bring us back into range. And then the major resistance is this trend line here, like we see in Ethereum, around 19,000. So keep an eye out for that. Keep an eye out over the next coming couple of 4-hour candles to see if we break down lower or higher. If we do break down, we have just discussed targets. Let's look at the broader market. Solana is kind of following Ethereum in this case. If we take this uptrend, oh, that was the wrong button. There we go. This can go. We see that it is kind of broken out of its channel and is looking to test its, there we go, looking to test its support, which it's done fairly well. And now we will see if it manages to kind of break through this resistance here again around that 14.5, which would be fine. If it does, you will have targets to the upside of, let's say, 16.5 approximately, and maybe 17.5 to 18 even. That would kind of be the next couple of targets if we do manage to break. Again, this would need, broader support from the market, so Bitcoin, Ethereum also making a move upwards. DYDX is doing decently. It's kind of stuck between these two levels now. It could still make somewhat of a head and shoulders pattern, but it's not great. It's a bit sloppy, so I would probably not act on it, because it's not quite how I like to see it. XRD is having a rough time. It is kind of bouncing around on its 0.035 support. And still telltale signs, low liquidity, not a lot is happening. It has tested its previous supporting trend line twice now, so on a next pass over it could break through and maybe test at 0.045, especially if it can make a higher low over the coming couple of candles. Let us have a look further at AVE, for instance. It is still kind of playing jump rope with the resistance of 58.2, which is not great, but if we do manage to break through properly, we have the targets of 61 to 63 approximately, and after that the range would be 68 approximately. So that's fine. It's not doing too shabbily. It's slowly grinding up. Could become well, this candle is obviously not finished yet, so we can't really make a proper line over it. We do see that there is a bit of a resistance trend. Let's have a look if that has given us a divergence. It has not. That is a good sign for us and for our position. So, oh, that's not what I meant to do. There we go. So for AVE, kind of the same thing. We're waiting to see if it can properly break through its resistance, because we see here there was no proper confirmation, and that is what we would be waiting for right now. I can clean up this chart a little bit, actually. There you go. So that is it for AVE. Anything else interesting currently in the market? Not so much. Cake is just hanging around at that $4 approximately. You could kind of, if you squint your eyes a bit, you can kind of see an ascending triangle. If it does break through, it could, this is what, 340, so it could move up to 440 again, which is kind of the top of this range here. So that would not be too surprising if you see that, but then again, kind of as with the broader market, we would need to see a bit more oomph from the rest of it as well. And of course, there's still a lot of uncertainty around regulations, around FTX, Grayscale, and all the other big names that are currently under extreme scrutiny, which is fair enough. But it does make people a little bit jumpy, so be prepared. And yeah, mainly just that. It's probably still going to be a volatile time for a while, after which we will probably bleed out for a little bit, and then we can kind of start building on the next run. So be aware, there's also a decent chance for a bigger recession over the next year. So all things considered, it might still be a bit of a bloody time to come for the markets. So be prepared, know that, and have your plan ready, which of course we at the Camp Compound do our best to help you with. That is it for today. Hopefully it was useful. Hopefully you've learned something, and I will see you all in the next one. Bye bye.